Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor, helping you realize your dreams of owning a home or investing in one. Well, today, a little different. I wanted to talk to you guys about a deal that was proposed to me recently. So I met someone who sells land. He has a done-for-you system. He chooses the land for you. You basically just give him the money and he takes care of everything, buying it, purchasing, managing, etc., etc. The taxes are just $16 a year. So, that was very attractive to me, right? Well, I shared with him what I had and, how much I would be able to partake. And I wanted, of course, a little bit more information. So when he heard what I had, he would ask me about my 401k. So I told him, yes, I do have one. And he was like, did you know it's self-directed? So I said, no, actually, it is not self-directed. And he says, no, it is. He says, go and check with the administrator. But he knows that all 401ks, you can borrow money from it and then you can put it back. And he says this is what made him a millionaire. Just a little background, this particular person worked in the stock market a while back, and he found that the stock market was just too fickle, which is one of the reasons why he moved into real estate. And he says to me that when you just rely on your savings separate from your 401k, it's going to take you longer to get to where you need to be. And the 401k is invested in the stock market. And since the stock market is just so fickle, it's just better that you borrow against it, buy real estate, particularly into his deal, and then put the money back within the time that you're supposed to. All right. So, I listened to what he said, but I wasn't totally, going with everything. I said, I need to do my own math and I need to do my own due diligence, so I'll think about it. And he says, yes, please do so. And he says, remember, you're going to borrow against the 401k, not withdraw, because if you withdraw, you'll get a penalty. If you borrow, they only charge you a particular interest rate. Okay, I said, all right. But again, I wasn't wholeheartedly with it because I've been burnt a few times. And even though this person was recommended to me, I still felt like I need to look into this deeper. All right, so the land is located in a place that I have never been to before. Okay, I've never been to that state before. So I really don't know what's going on that much over there. So I went to one of my favorite sites, City Data, just to verify the information that he mentioned. So one of the things I remember him saying was that there were two major giant corporations that were located there, that were headquartered there. Well, when I looked it up, that was not the case. Those two major corporations were actually 16 miles away from that city. That's not really too bad, okay? It doesn't take that long to drive 16 miles one way or the other, all right? But I did look to see, okay, well, how many businesses is in that particular city, in that area? And there were only 10. So I wasn't really blown away or impressed with that, to be quite honest with you. Then I said, all right. I went back to him and I asked him about the land a little bit more and about zoning. And he was like, oh, it's only zoned for houses. You can't put anything else on there. Again, I wasn't all that crazy about that idea either, because that's very limiting, in my opinion. I didn't really go too much in depth with it, like calling the zoning board and what have you. But I was like, all right, fine. Okay. Because see, the thing is that even if I did that, the way this system is set up, he's the one that would be managing it. So he probably would not want to, let's say if I were to go out and get a contract with some of the people who put satellites on land and what have you, he probably would not go ahead with it, because that's more work for him, and he probably doesn't want to do. He didn't appear to be the type of person that would want to step out of a system that he has already created. Like, he wouldn't want to expand into that area. So I was like, all right, let me check that whole 401k situation that he mentioned. Okay. So when I looked it up, it says that I can borrow against my 401k. So I was like, oh, okay. He's right about that. So I got happy. But then I found out that when you're paying it back, it's going to be 1% of whatever the current rate is. So as of 2024 today, the current rate is 8.5%. So that means I would have to pay back 9.5%. So when I looked at his brochure said the rate of return was 10%. So I was like, wait a minute. I got to pay them back 9.5%, but you're only giving me 10%? I'm kind of better off with the money just staying in the bank. Honestly, that's not going to work out for me. Oh, it would really be better, or just let it stay in the 401k. It would really be better for me to use my other money that I have somewhere else that I don't have to pay back, right? The money that I have in my savings account. It's better that I use that and buy the land than to use what's in my 401k. Yes, I can use what's in my 401k for real estate, but not for his particular real estate. And what I realized too is that if I'm going to have to borrow money at 10%, I should at least get 15-20% back. Then it's going to be worth it. You understand me? And what I have right now, the stocks and what have you, they're not really doing too bad. So I feel like right now it should stay where it is. Now, I believe this is the point that I wanted to bring in. And that is, okay, fine. He may be telling me the truth that borrowing money from his 401k is what made him a millionaire. But things have changed. The market is not the same. See, back then, Bush was president. And back when Bush was president, our economy was really in the toilet. It was really horrible. So yeah, it would make sense back then to borrow money from the 401k. In addition, the interest rate was lower. So back then, it would make money again to borrow from the 401k and purchase real estate. But today's market is a little bit different. Today's market, you can still find stocks, ETFs, mutual funds that are doing very well. So it may be best to keep it in the 401k. Just make sure that whatever you choose is doing well. If you do choose to take it out, don't take it out and get something that's only 10%. So because of this, I'm going to have to put a no. I'm not going to move forward with this particular deal because I'm just not comfortable with the returns. That's basically it. And that's the point that I hope you guys understand where I'm coming from with that. You have to, when you're looking at investments, you have to say, okay, this worked for him, it's going to work for me. No, do your own due diligence, do your own math, and make sure that that's the case. Otherwise, it's okay to say no, walk away. There'll be another deal, and keep looking until you find the return that is going to be most beneficial for you. All right. So guys, that's all I have for you. Hopefully what I've shared will help you make smart financial moves. Feel free to pass this amongst your friends. Remember, each one, reach one, teach one. Bye for now. Until next time, have a good night.